What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX. Today we want to talk about the breaker pattern and how you can trade it on Deriv Indices. So first of all, I'm going to take you back to the whiteboard so that I explain to you what a breaker pattern looks like. Then I'll come back on the charts and show you live examples of the charts that we're going to be trading on Deriv. And before we go there, if you don't have an account with Deriv Indices, there's a link in the description down below where you can trade with Deriv with these best indices that you can find on the market. The links are in the description down below. Register and get ready to trade. So let's just go right into it and look at what we need to look out when we talk about this breaker pattern. Right, so this is a typical breaker pattern. So I want you guys to understand that on any breaker pattern, you need to pay attention to three things. Number one, it is this anchor that you see here. So an anchor, number one, can be an M pattern, can be a W pattern, can be a triple top pattern, can be a triple bottom pattern, or can be a what? A head and shoulder pattern, or an inverted head and shoulder pattern like this. So this is what we call an anchor, and these are variations of what? Of an anchor. So here I'm just going to use an M pattern or a double top pattern to illustrate what a breaker is. So the number one priority, or the number one thing, or the number one characteristic of this pattern is the anchor, which means number one, you have to identify the anchor. It can be any one of these six. Then you identify the anchor. After identifying the anchor, what you need to be doing is identifying the order block that would have caused the push of the second leg or the last leg in the case of what? Of a double, of a triple top or a triple bottom. The last leg, the order block that is responsible for that push to the what? To the second leg is what you're going to mark out, and you're going to be waiting for an explosive move that breaks that order block that you have marked. The process of it breaking is what we call a breaker, and the last one is the entry. So we explain the entry on the chart and show you guys how you can enter this particular setup and how you can profit from it. Right, so here we are on the charts, and this is volatility 51S, and again it is offered only by the Deriv broker that is found in the description down below there. So if you want an account, you can get your account in the description down below and get to trade volatility 51S. So back to our breaker theory. So number one, remember what I said, this is the M5 time frame, and you don't need daily buyers, right? You don't need daily buyers. What you need to do is identify your anchor. So this is your anchor, this being a double top. This is your anchor, and remember we said you need to identify the order block that is responsible for the last push. So what is the last push? This is your last push to that yellow area to your. So this order block is what you are going to mark, and what are you going to wait for? You are going to wait for an explosive move that breaks the what? That breaks this order block that you have marked, and you are going to wait obviously for the retest of this what? Of this breaker that would have formed in this what? In this area, and this is going to be a trade. And before you go, there are three variations of trades that you can do on this particular trade, and I'm going to show you all the three, and I'm also going to show you the position of your stop loss that you need to be making on this particular trade, right? So this being the retest, your stop loss is going to go above the breaker obviously, but I'm going to show you how you can enter the three ways of entering this type of trade. So I'm just going to explain entry number one right here. So number one is you're just going to enter as soon as price gets into the gets back into the breaker. As price gets into the yellow box, you're just going to enter there, and your stop loss going above, and wait for this move. And I'm also going to show you how you can target in terms of where you're going to be putting your stop loss and where you are going to be putting your take profit, right? So if you look at this was a very good example of the setup that we were waiting for. Remember, we have this anchor, as you can see. we have this anchor. Then after the anchor, what do you have? You have this breaker. Why? Because this is the order block that was responsible for price moving back to the anchor for the last leg or the second leg, because in this case this is a double bottom. So this would be the second leg, and this being the order block that pushed it becomes our breaker. So what were we waiting for? We were waiting for price to move back to our breaker, as you can see. So as evident as it is, you can clearly see that this failed to get to our breaker, and we were not going to execute anything here. Why? Because we wanted our trade to get to the breaker so that we can put our stop loss just below the breaker and go up. So this was a missed trade, or this was a missed opportunity. We look at this one. This is a double bottom. Then this is the order block responsible for that move down right to this order block, and this becomes our breaker. So what are we doing here? This is the explosive move. Remember, we are looking at three rules, right? Explosive move, anchor, and the breaker. And this is the retest. And as it is shown here, you can clearly see that this retest is what we were waiting for. So I'm just going to show you the entry technique number 2 on this example. So remember, said on the first example, we said you just enter as soon as price gets into the breaker, right? So the entry number 2, or the technique number 2 that you are going to do, is you are going to enter as soon as price gives you a confirmation candle in the direction that you need to be going, right? So this can be a pin, this can be an engulfing candle. So in this example, I'm going to be using this engulfing candle as my confirmation candlestick. So this engulfing candle was the confirmation candlestick that I would have used, or I would have waited for, as you can see here. So this would have been my buy position, and my stop loss was going to go below the yellow zone, below my breaker, as always. So there's no change to that rule. So as you can see again from this one, number 1, we have an anchor. So this is your anchor, this is your breaker, and this was supposed to be the retest. And as you can see, this retest did not get all the way back to this particular yellow zone, and we missed that trade. It's fine to miss trades, and it's also fine to get trades, right? So don't chase trades. So if you go to volatility 75, this is also a synthetic indices that is found on Deriv, right? Synthetic index found on Deriv, and you can trade this if you have an account. And if you don't have an account, you know what to do. The description down below is loaded with links to this broker that you can open today and get to enjoy these setups and these sweet. So number 1, this is our anchor, and as you can see, this anchor is more like head and shoulders, where you are seeing this is the shoulder and the other shoulder is this one, and this being the head, right? As you can clearly see here. So this is shoulder, head, and after break, this is the order block that we are that pushed this to this head, right? So this is what we are marking, and this is our entry, right? So now entry number 3, entry technique number 3 that I want you guys to know is the limit entry that you're going to be putting just below the breaker here. So you're going to put your limit entry just below the breaker and wait for price to come and take you in and go in the direction that price would have wanted to go. So this is another example. Consider, learn from. This is the anchor, right? What is your order block that was responsible for the push? This is the order block, and this is your breaker. So you could have used this breaker, or you could have marked this one as your breaker. Either of the two would have worked perfectly. So let's just use the last one, which I marked this one. So this one is your breaker that pushed price to this leg, right? So price breaks that aggressively and retests that. So this is your trade, right? So if you're looking for just entering as soon as it gets into the breaker, your entry was going to be there. And if you were looking for a confirmation candle, your entry was going to be there after those 2 pins, which we call tweezers, right? And after that, if you are looking for a limit entry, you're going to get in as soon as price gets back into the yellow zone, because your limit entry was going to be on that end. Or you could have used just the body of this candle, and you could have gotten your trade at this particular point, and could have gotten what we call a sniper entry in the streets of Forex. Guys, if you don't have an account with Deriv, there are links down below that you can register and get your account and get trading with Deriv Indices. I will see you on the next side. I'll see you at the top. Trade what you see. Hands to the head. Salute.